Amazon on the rise following a big upgrade from Evercore today. This as the majority of the FANG names also holding strong amid the sell-off in the broader markets. For more, let's go to Bob Pisani down at the New York Stock Exchange. Hey, Bob.
Hello, Melissa. Good to see you. As always, Amazon had another strong day, up more than 1% on heavy volume as Evercore ISI upped its price target to $1,965. That's from $1,800. Also helping today, a Wall Street Journal report that the company was planning to open grocery stores that would be distinct from its Whole Foods brand. Now, Amazon is now back above Apple in second place for the largest U.S. companies by market capitalization with a value of $832 billion there. FANG stocks are having a great year, by the way, led by Netflix up 31%, huge move in January. Facebook up 27%, Amazon up 13%, and Apple and Alphabet both up about 11%. But many strategists think there's even more upside and that FANG will continue to outperform the rest of the market. Now, analysts have an average price target for Facebook of $195. That's almost 19% higher than its current price. $2,122 for Amazon. That's about 26% higher than the current price. $400 for Netflix. That's 14% above its current price. And $1,341 for Alphabet. That's 17% above its current price. These estimates are well above the average analyst price target of about $3,000 for the S&P 500 in 2019. That's only 7% above its current price. You see the FANG stocks way above the market averages. So why all this bullishness for FANG? Growth is still very tough to come by on a global level. And the one thing most of the FANG stocks do have is growth. When growth is very hard to come by, investors will pay up for growth, even if the prices drive companies into bizarre valuation levels, like the 60 times forward earnings multiple for Amazon, or even worse, 87 times 2019 earnings multiples for Netflix. Back to you, Melissa.
All right, Bob. Thank you. Bob Pisani from the New York Stock Exchange. Bob was mentioning the high multiple stocks. Karen, you're in two stocks that could be argued are actually value stocks in FANG.
Well, Facebook and Alphabet. Right. Well, Facebook, as we know, has had its idiosyncratic, not totally just to them, actually, but I think it's still attractive. It's had a very nice bounce from the bottom. I think Alphabet is actually even more attractive. I don't know why it hasn't gotten more of a lift from Lyft, from Waymo, from all the focus on autonomous driving, and the rest of their business is fantastic. It's an extraordinary cash flow generator. My only beef with them is the lack of any significant buyback.
Mm-hmm. What happens, though, when the market's, you're just scorching high multiple stocks.
I was, but high multiple stocks without growth. That's the problem that you have.
Okay.
So that's why I would like something like Amazon, where we're seeing a lot of growth. Google's kind of interesting. They got multiple levers to pull.
Levers.
Yeah, levers.
How about levers?
That's British.
Can we pull those too?
Levers.
They can be pulled.
Levers, leverage. That's what the British say. Nonetheless, Amazon, I think, is the play here. It's got growth. I understand that they're very high multiple and people don't like that, but nobody's really cared about Amazon's PE for the last 10 years. There's a couple incidents here and there where we get worried about it, but they have levers that they can pull as well.
Yeah, I'm going to take Amazon as well, so I'll agree with you on this one. Unlike with Salesforce,
the levers.
Yeah, I'm going to take Amazon. When we talk multiples of the four FANG stocks, they actually have the lowest price to sales, though. And really, the part of Amazon's business I'm most interested in is the cloud. Right now, it's only 11% of revenues, but it's growing at 40 to 50% per year. And what we expect is that cloud usage is going to double over the course of the next 2 to 3 years. There's more and more data, and in fact, 90% of the world's data has actually come from the last 2 years. So that's how high growth this industry is. So I love Amazon here.
By the way, if we're getting psyched on FANG right now, we should, everyone at the start of the show should have been pounding the table on the market, because if this has all been happening without the participation of FANG largely outside of Facebook.
And people, MAGA.
And the MAGA. The bottom line is people should be loving this. Let me pound the table with Karen on Google. To me, this is the best combination of valuation. Look, the top line growth is still absolutely fine. YouTube is growing. I think it definitely mitigates the margin pressure. And I think there are buybacks coming. I think actually this is a stock with more levers to pull than anyone else.
For more on the markets and the best way to play the FANG space, let's go off the charts with Ari Wald of Oppenheimer over at the Plasma. Ari, what are you looking at?
Hi, Melissa. Well, let's start with the market here. We had a downtick today. I wouldn't read too much into it. Now, what is interesting about the move in the S&P 500, occurring at an important resistance level at about 28.15. That was the November peak. However, we think the emphasis should be on the big picture recovery that's taking place because of the very strong internal breadth readings that we're seeing. For instance, the percentage stocks on the NYSE above their 10-week moving average, that's about equivalent to a 50-day moving average, recently topped above 85% for really the first time since March of 2016. And I think you can see similar behavior as we saw in that 2016 period, where after the strong run off the low, the market moved sideways for a few weeks to a few months ahead of that strong uptrend. I think that's what's at play. History would support that as well. Let's look at the forward returns based on that indicator, looking 6 months out on the S&P 500. First off, for any 6-month period, the average gain is 6%. 4%. That's the horizontal line right here. Now, it is good to buy oversold. When you're buying when there's very few stocks below their 50-day moving average, you tend to have above average returns. But look at this. Returns are even stronger 6 months out when you're buying very strong overbought readings, when you get to that 85% level. So history going back to 1967 would suggest that the breadth readings we're seeing historically followed by above average returns and the upcycle. I like Tim's point here. Not only are we seeing this strength, we're seeing it without some of the biggest stocks in the market. You know, for us, Amazon and Apple as well really haven't participated. Here's the Amazon's chart. More or less has underperformed over the last 5 months, and now we're starting to see this decline become less bad. It's building a base. It reversed its downtrend. More recently, it's also moved above its 100-day moving average. That's the most latest data point. I think as long as you're above 1,600, the place for a breakout to the upside. You still haven't completed the space. I think you get it above 1,770. Amazon, after that big run, finally a tactical play again. Was also asked to chart Netflix. Here's one that's a little bit more extended off its 100-day average, but nonetheless has reversed its downtrend, has made higher highs. We like it for the long term. We think these high growth companies do indeed lead the market higher in this low growth world. And I think Netflix becomes attractive as you start getting down to 325.
So you spoke about half of FANG being in a good spot, Ari. I mean, how about the other half of FANG? And if they continue to stall, and then you can throw in, you know, parts of Dan's MAGA trade, really the AGA of the MAGA, ex-Microsoft, right? Well, he did create that acronym in particular. But, I mean, if we see this, so basically, if we see the stall of these stocks outside of the two that you've highlighted are in good spots chart-wise, can we see the markets actually go higher?
It's more than just these two. I heard Karen's fundamental pitch on Alphabet.
Yeah.
The charts are aligned. 1150, get a breakout there. That's a clear shot to 1300. Facebook is the one I think needs more work to be done. I think it is in the process of the basing. But for the most part, it's FANG. It's the entire market. Very strong breadth in the market here.
All right, Ari, thank you. Ari Wald of Oppenheimer. Who likes what Ari is selling here?
I like when he agreed with me, that part.
Oh, yeah.
I think we all agree, actually.
He threw us all a bone, which was smart, by the way. Look, I tell you what, on Netflix, this is a company that actually hit their all-time highs in June of 2018, is actually underperformed the S&P by 15%. So, you hear me like to talk negatively about Netflix because, I've been wrong the stock a long time. But I tell you what, I think the valuation at some point, people have started to understand there's only so much growth you can price in there. And of all of them, that's the chart. And again, underperforming the S&P by 15% since last year. I don't think people know that.
Yeah.
Facebook's the one that concerns me. So, on from a valuation standpoint, it does look cheap. But my issue with Facebook is that they've really diluted their advertising platform. So they got rid of demographics, and it just makes it more and more difficult for businesses to get to the right consumer.
The growth doesn't substantiate what you're saying, right? I mean, that was a massive quarter.
Sure,
you think it's to come, and you think it's not priced in enough?
No, so from a digital advertising standpoint, I like Google much, much better than Facebook. I think their platform is significantly better. Yes. So if I had to pick one or the other, yeah.
The one thing I would say is the market can go sideways to down, and FANG can rally. I mean, we've seen that. We've seen that. Ari just pointed out that we've had this kind of sideways action here, yet the market has ripped. So I think you could see rotation. We've seen multiple rotations. You see rotations out of some of the higher, the stocks like the materials, healthcare that we saw today, those type of things. Getting out of that and maybe getting into these higher growth areas, you see the S&P go sideways to down and these stocks go up.